Want to learn the essential life and health insurance topics quickly? This slides guide is packed with high-priority points to help you study smarter, not longer. Today we will cover underwriting and policy issue in health insurance. We will focus on key concepts, risk selection, policy delivery, and practical examples. Understanding underwriting is critical for evaluating applicants properly and ensuring that policies are issued correctly. What is underwriting? Underwriting is the process of risk selection. It determines whether an applicant is insurable and at what premium. The primary purpose is to protect the insurer from adverse selection by evaluating each applicant against established standards and guidelines. Insurers cannot simply accept all applicants at the same premium because individuals have different risk levels. For example, a smoker with diabetes will be charged a higher premium than a healthy non-smoker. Sources of underwriting information. Underwriters gather information from multiple sources. The application itself has three parts: general information, medical information, and the agent's report. Credit reports assess the likelihood that the applicant will pay premiums. Applicant statements are evaluated as warranties or representations. Medical reports, including attending physician statements, provide detailed health information. Inspection reports may include lifestyle, character, and financial details. The Medical Information Bureau detects misrepresentation across insurers. Special questionnaires are used for high-risk activities such as aviation, military service, or hazardous jobs. For instance, a skydiver may need to complete a special questionnaire and could face higher premiums. Field underwriting. Agents play a key role in field underwriting. They ensure the application is complete and accurate, collect the initial premium, forward the application promptly, report any misstatements, and deliver the policy to the insured. Effective field underwriting helps reduce adverse selection and ensures that the insurer has all the information needed to evaluate risk. Application errors and signatures. Errors on the application must be corrected with the applicant's initials. Signatures are required from both the applicant and the agent. In cases of third-party ownership, such as a parent purchasing a policy for a child, both the parent and minor must sign. The USA Patriot Act also applies to insurance transactions, requiring anti-money-laundering measures. Risk classification. Applicants are classified according to risk. Preferred risks are low-risk individuals who receive lower premiums. Standard risks have average risk and pay standard rates. Substandard risks are high-risk individuals who are charged higher premiums, may receive a rider, or have limited coverage. Applicants who are uninsurable are declined. For example, a person with heart disease might be classified as substandard and face higher premiums or an exclusion rider. Risk factors. Risk factors include physical condition, moral hazards such as smoking or drinking, occupation, age, sex, medical and family history, hobbies or avocations, and insurable interest. These factors help determine the likelihood of claims and appropriate premium levels. For example, someone with a hazardous occupation or extreme hobby like skydiving may face higher premiums due to increased risk. Premium determinants. Premiums are influenced by morbidity, which is the likelihood of sickness or disability, interest earned on premiums, administrative expenses, the scope of benefits, claims experience, and community rating within geographic areas. For example, a high-deductible plan typically has a lower premium but requires more out-of-pocket spending from the insured. Premium receipts and effective dates. Coverage often begins once a receipt for the initial premium is issued. A conditional receipt makes coverage effective if the applicant is insurable, while a binding receipt guarantees coverage until the insurer rejects the application. Premiums can be paid annually, semi-annually, quarterly, or monthly. Collecting the initial premium is critical for coverage to start. For example, an applicant who pays the initial premium may have immediate coverage under a conditional receipt. Policy issue and delivery. Policy issuance occurs once the insurer approves the application. The effective date depends on receipt of the premium and application approval. If the premium was not collected upfront, a statement of good health may be required. Policies can be delivered personally, where the agent explains the coverage, or constructively, where the policy is mailed. Personal delivery is important because it builds trust and ensures the insured understands their coverage. Tax treatment of health insurance. Health insurance premiums and benefits have different tax treatments. Premiums paid with after-tax dollars are generally not deductible, but benefits may be tax-free. For disability income insurance, personal DI premiums are not deductible, and benefits are tax-free. Medical expense reimbursements are not taxable, but unreimbursed expenses can be deductible if they exceed 7.5% of adjusted gross income. Employer-provided premiums are deductible for the employer, and benefits are usually tax-free. For example, a self-employed I. Managed care and cost control. Managed care policies incorporate cost control features such as deductibles, co-insurance, and benefit periods. Additional cost management strategies include mandatory second opinions, pre-certification reviews, concurrent reviews, outpatient surgery, and case management. Point-of-service plans allow insureds to choose in-network providers, coordinated by a primary care physician, or out-of-network providers at higher cost. For example, requiring a second opinion for elective surgery reduces unnecessary procedures and controls costs. Key takeaways. Underwriting protects the insurer and determines the premium based on risk. Risk classification categories include preferred, standard, substandard, and declined. Premiums are influenced by morbidity, age, occupation, benefits, and expenses. Policy delivery and receipts establish the effective date of coverage. Managed care features help control costs and ensure proper utilization of services. Understanding these concepts is essential for both exam preparation and practical application in health insurance.